You are listening to ChartingWealth.com for Friday the 4th of November, 2016. Markets down again. We have called it since it started all the way back in mid-September. We saw our weekly chart roll over. This is no surprise. Don't let anybody tell you that it's the upcoming election that's done this. We look back at our weekly chart, we can see we're around the 9th, the week ending the 9th, the market rotated over going down. It has continued on about the same trajectory since that point. This is not surprising. It's why you need to be able to read a stock chart and not rely on the news for what's actually going on. The charts don't lie, and learning how to read these charts is what you need to be able to do to protect yourself, your family, your finances, your resources. What do we have going on? We've got a gigantic down candle for the first day of the new 2-day chart on the 3rd of November. This candle will finish drawing up on Friday the 4th. We're below the 2-day trend line, well below the weekly trend line. We've seen derivative oscillator heat up even more. We saw the PPO, which is our old MACD indicator, the moving average convergence divergence indicator. We're now using the price percentage oscillator. Same calculations, it's just based on a percentage of price, not the dollar, which means you can use it across the board. We saw that kink over going down at an even steeper angle on the 31st, the last day of October. And we've got massive down movement. For the day, the market was down 0.52% on Thursday the 3rd. Now let's look intraday because we're particularly interested in seeing how all this movement occurred. Down in the morning, down again in the afternoon. Again, we crossed over after our backup, which is what we always wait for. We wait for a good backup on the market after it's taken a move down on our big charts. And then when our short chart rotates going back over, like it did on the 27th, that's when we look to get in and ride that down move safely, which is what we have been doing. Those of you who have been making lots of good money, again, sometimes you want to lock that in. And when we say good money, we're talking about virtual trades. We are not a stock calling service. We do not give market advice. We teach you how to read these charts. And then after you get good at this, you can make up your own mind. We appreciate all the good comments we get from all of you, those who are seasoned in the market and those who are just learning. So, down movements throughout the course of the day. So again, watch if you have done well. If you jumped in somewhere around $106 and you've now seen great moves up about $1.50 on just the IYY, and that's just the down move. Again, those of you who are new wondering, why is this guy talking about buying something that's losing value? We're talking about buying into an inverse fund. Again, if you haven't listened to our training on inverse funds, how to make money when markets crash, you need to do that. You can find it at our YouTube channel. You can find it at our ChartingWealth.com website, and you can find it at our iTunes podcast. Any of those, you need to listen to it. Now, we're going to go from IYY, which is a total market index fund, drill down a little bit to the S&P 500 as represented by SPY, down 0.43% for the day. Again, another big down candle. Derivative oscillators heated up. The PPOs continued to move down well below our 2-day and our weekly trend lines. Let's look at what happened intraday on the 4-hour chart. What do we see? Down movement in the morning, even greater down movement in the afternoon. Even saw that wick on the bottom go below the Bollinger Bands. Remember, our Bollinger Bands have really spread out, showing volatility. They're volatility bands, and when they get narrow as they did between about the 25th of October and the 31st, we saw the volatility in the market reduce. But then once this big down move started, we saw the volatility increase sharply. So again, we need to always pay attention to all of the indicators that we have, not let them fool us, not get analysis paralysis. But remember, our biggest is always the PPO. Then we look at the DO. And then we look at, of course, our candlestick patterns with our Heiken Ashi candlesticks. If you haven't listened to that training, That's another good one. We don't use standard Japanese candlesticks. We use the Heikin Ashi, the average pace. Now, let's go to the Qs. That's the NASDAQ 100. It has been dropping off the deep end down the most of our three indexes today, double what we saw in the S&P 500, down 0.97%. Big down candle on the first day of the two-day candle, actually closed out below the Bollinger Band. Huge heat up in the derivative oscillator and the PPO continuing to trundle down along with the signal line. If we look intraday, what do we see? Well, those of you who jumped in around the afternoon of the 27th, you had the market somewhere around 118 or so, all the way down, the low for the day, pushing down to 113.92. What an incredible chart that folks have just been doing extremely well following our method. Just amazing. When did we see all this happen? Well, that was when we saw our weekly chart finally rotate over, going down. That then opened everything up for us on the Qs, because the Qs up until that point had been really trundling up for a while. But once we had that rotation over on both the weekly chart and then the 4-hour, that was the buy-in point to really do well when the market rotated over. For example, if we look at QID, which is the ProShares Ultra Short of the Qs, what do we see going on there? Well, in that same afternoon, when the Qs rotated over going down, the NASDAQ did, we saw QID, because it's an inverse fund, rotate over going up. Started at somewhere around about $24, as high as 26. Yes, 26.03 was the last for the day. So again, pretty good return on a $24 investment, $2 in about a week. Not bad if you can read the charts once we get into the fall-winter trading zone and we've gotten out of those summer doldrums. Remember that old adage, sell in May and go away? Well, you come back some other day, and that's in the fall-winter trading zone. Now, lastly, we're going to go to gold. On our two-day chart, we see in gold has crossed over going up. On the week ending the 2nd of November, and we have 3 up candles in gold on the two-day chart. I'm sorry, I'm thinking about weekly charts. It rotated over going up on the 2nd, Wednesday the 2nd, but gold had already been going up on our 4-hour chart, which is our real trading chart for gold. Gold rotated over going up back on the morning, the morning of the 13th of October, and has never rotated back over going down. It has been shooting up. Again, gold somewhere in the neighborhood of about 119, 120, and up to 124, actually almost up to 125 as its high. But again, gold continuing to move up. It does look like over the last day it opened lower than it closed on the day before as far as our Heikin Ashi candlesticks go, showing the average pace could be slowing, so pay attention to that. We don't see any move over to crossover going down yet on our PPO, but pay attention. The derivative oscillator's lost some of its energy. Now, it could heat up again as it did previously, but just pay attention. Remember, this 4-hour chart has been quite prescient for us. If it crosses back over going down, might signal you're jumping out of that. If you've already made some money, again, just be careful. You want to lock into those virtual, again, I say virtual gains. Again, we're not a stock calling service. We want you to set up an online trading account with virtual money. They'll all let you do that, and then you practice. You learn how to buy, how to sell, how to purchase options, those types of things. That's where we are at the close of the day on Thursday the 3rd as we go into Friday the 4th of November. We appreciate you being with us. You want to help us out? Tell you what you can do. You can go to iTunes, subscribe. You guys have made us as high as number 6 in the world as far as stock market podcasts go. Please continue to help us out there with our metrics. Say something nice about us. Subscribe to the channel. Listen to it every day. Also, you can subscribe to our channel on YouTube. We appreciate that. We've got, 1,400 people there that are subscribers that tune in to us. We so appreciate you. Let us know what else you need from us. You can always email us from the website, chartingwealth.com, where you can sign up for our newsletter. With that, what will you get? Lots of goodies. You'll get our How to Read a Stock Chart video, the guide to get you started. You will also get the layout that we use at freestockcharts.com. The operative word there is free. Isn't it nice to have free stock charts? And you'll also get our daily market worksheet, what you need to put your learning how to read these stock charts into hyperdrive. Thanks so much again. God bless you from chartingwealth.com.